I'm going to take some time in this video here to go over a trade or two technically that I took under the same idea on Friday. Just break down everything that is important and what you should understand about this trade to find high probability and high quality trades in the market and in this specific past week. Starting here in the daily chart, when I look at this, and let's take this back to Wednesday, I'm always looking for something on the daily because this is my main time frame where I'm always going to start here. And if there's nothing obvious on the daily, then I'm not going to move forward from there. There's nothing beyond this point if I can't start and find a framework on the daily. And the main thing that I am looking for is an area in the market to the upside or to the downside where I can trade away from it. That is the main thing that I'm looking for. And when I look left here from Wednesday, off the highs, there's nothing. Off the lows, we have relative equal lows. There is really nothing established here, and we have been ranging in between these 2 points, high to low, and staying inside of that range. So when I look left, there's no established area, and I can break this down to a 4-hour that I could say the market has traded into this point, has given a signature there, and then we can now trade away and expect a continuation and an expansion in that direction. So my eyes are going to go to the areas where that can exist in this chart. So assume we're in this range here, off the highs. I'm not pointing out anything in between because I don't know if this is meaningful in the market. I'm going to pull my eyes to the extremes, which is this low here, the same one that we noted on the daily time frame. This low to this low, relatively equal. Draw that out. And we can do the same off the high. Draw that out. And these are the two areas that I would put focus on. And we're basically just allowing the market to trade into one of these areas. And this is basically the understanding and the process of not needing to predict where the market's going to go. I don't need to care if it's going to the high. I don't care if it's going to the low. I don't need to know when it's going to happen. I'm just simply waiting for this occurrence to be in the market. And we had Thursday come through. It was a half day, and that was a day that started to engage this low here. This is what I call a relevant swing in the market, meaning what price does at this point is going to give me information and expectation for what it should do next. How does it develop here? What is the reaction like? Because I know at this point in the market, it matters. Versus when we go back into this 4-hour time frame, if the market engages this low, for example, but not this one here, and starts to trade off of it, I don't know if that's manipulation. I don't know if that matters because what about this one here? Same goes with any of these highs. I consider these failure swings. If the market engages this here, does this high really matter? Or what about this one here? Why not this one? I'm drawing from extremes of the market because I know when price engages that point, what it does there truly does matter. So that's what I'm going to be going off of. We look at the lows. We've engaged a relevant low. Again, I don't care if it's the high. I don't care if it's the low. I'm just going to be reacting to the development of this here. So we look at the low, and I'm going to allow the market to build context because I'm going to expect one of two things once we reach this low. I'm seeking either a manipulation or I'm seeking a continuation through that point, a signature where there's a lack of a manipulation, which then hints at that we can then see a continuation through that point. Now here, when Thursday hits this low, this is not enough context for me to say it's a manipulation. It's not enough context for me to say there's a continuation. So I allow the days and the market to develop to give me that confirmation. I don't need to act on anything too soon. So I'm going to allow the development of Friday to then tell me what this should be. Now, this works in our favor because when we go to the daily time frame, Thursday is a half day. It was a bank holiday. So that gets blended into Friday's candle. So while Thursday itself, when we look inside of it on the hourly, this did not provide the full context. Once we gap up here on Friday's open, that is showing me that it is a manipulation. Because if we go back out to that daily time frame, that's showing relevant low, running into that point and then quickly turning back up, creating that wick on a daily candle. Go back to the hourly, we have another signature that I can use as a confirmation to this idea. Right when we open up, start expanding higher. I'm assuming continuation away from this low because if you look at this series of down close candles on the hourly time frame to that lowest low that reversed, we draw out the opening price of that highest down close candle. And that there is my reversal confirmation. You can call it a change in state of delivery. This here, once we get that close, I am confirming the manipulation of this relevant low on the daily time frame. I'm getting a close above to know that this low should not be returned back to. I know that we're already in that continuation. This intraday low does not need to be returned back to. So we are already in a position, and this is where I'm going to talk about my first entry, to actually position inside of this daily candle to see these opposing highs being run out. These are my draws in the market. So we can actually talk about this first entry here. This I would call a more discretionary approach. This is where I'm taking in a little bit more to put on an entry like this, but nonetheless, there's something to learn from this. And then my second entry is a lot more standard in terms of my process, in terms of using daily profiles, which I'll discuss as well after this. Now, when I'm looking here, we understand that this is a manipulation of the higher time frame, so it's supporting the idea that we should see follow through as a continuation. When the market in this overnight session, and this is usually uncommon to get this opportunity because the overnight session very rarely moves like this. But in this case, we've already confirmed and understand that this low doesn't need to be returned back to. We've started that continuation. Once we get a run of this short-term low, I'm basically looking left and asking myself, we know the higher time frames, this daily candle should be drawing higher. Is there anything else below this short-term low to this intraday low that the market absolutely by requirement needs to run out before I'm interested in seeing this going higher? No, there is nothing else. We've tapped into these opposing candles. We've run out a short-term low. There is nothing else in this area the market has to get down into. So once we run that out and start trading higher, I took a position in here because I understand we do not need to return back to this low. If this is correct on the higher time frames, and remember, all I'm doing on my entries is positioning on a higher time frame without wanting to get stopped out and just being along for that ride. I'm positioning myself in the market, putting my stop loss slightly below that low because I'm taking some nuance to this with the understanding that there's always potential that ES could make a divergence and Q can make a divergence. I don't want my stop jammed right on that low, but I give it a little bit more room. So I'm positioning with my bias, understanding that we should start seeing that follow through. That was my first entry, and I'm looking for the same targets as I would anywhere else. We can roll over into the New York session where this gets a lot more standard in terms of entry for what I'm looking at. So we already understand this low doesn't need to be returned back to. We have another continuation signature where we're running out short-term lows in the assumed continuation, closing above a wide series of down close candles that ran into that short-term low. That's another signature here once we start expanding through that point when the daily candle should be moving higher. This here is a new confirmation during the New York session where I can say this is a continuation of the daily candle. We do not need to return back here. We're leading into 9:30. The New York session should be a continuation. This is where we expect the market to get the most range. This is where volatility picks up. So we're assuming more continuation and also that we have highs to the left that can be traded into. Still having draws in the market is always a great thing. And I'm judging that for what I think is left in this market. So I can drop down to a 5-minute here because it's New York session. During the New York session, when the market gets more active, I'm going to be using a lower time frame because sometimes when it's offered, great, I'd love to use a 30-minute, even an hourly for entries. But during the New York session, the market simply moves too fast. It's too quick to develop, and these 30-minute, hourly, sometimes even 15, they take too long to close, and the market may just break away before offering any sort of entry. So here, 15-minute, you can see there's nothing, but we drop down to the 5, we get a little bit more detail, and we can get away with it because the market is trending faster. The first thing that I'm looking for, assuming a continuation, is down close candles. This here, because of the basis of the daily candle going higher on the higher time frames, closes above down close candles, valid ones, are going to be of interest for entries. So we get that first one after that close of what we just noted, down close candles on the 5-minute series drawing from that highest down close candle, the opening price. Once we close above, that becomes an entry signature for me because I am now assuming that we do not need to go back to this low and we should see follow through during the New York session. So this becomes my more standard entry. This was much more positional in the daily candle, a little bit more discretion. This here is aligned with the daily profile. I'm waiting for the New York session. I have all this context from the intraday overnight session, which is a lot more simple. So this is a very standard entry for what I look for. Taking a position on the close of this candle open of this new one. This becomes an entry. Stop loss goes at this opposing swing point. I'm not cheating my stop loss anywhere. If anything, I'm going to widen it, but putting my stop loss at that opposing swing. And then assuming we should see that continuation going along for this move here. And my 2R, I got a very decent fill on this stop loss here. 42 points. To some that may seem wildly absurd. Not in a day that we expect to expand. This is a 2R trade. We get a little bit more. So I took my first partial here just before 9:30. There was some form of volatility here. I'm not sure if it was a specific news event. It seemed to be like that, the way that the market was acting. But on that first initial push, past my 2R, I'm scaling up. Then 9:30 comes through. On a day like this, where if we zoom out, let's go to an hourly time frame. I'm going to take in this context. Let's remove this here. From the daily open, this is the daily open from low to where price is currently trading. That's a decent range when we understand what an average day can do. 370 points, that's really getting there. When we think about 9:30 and a day that's really expanded to beyond what an average day usually will do, 9:30 is really going to be that line in the sand of how it acts is basically going to determine what it should do from here. Does it have any more room to push price higher? If it doesn't agree with that, the daily range is going to be capped and it's going to return price back into the range. So my idea and understanding of that narrative is, while I'm managing this trade, I'm far more interested in selling back into that strength, not trailing a stop loss because I understand the possibility of this around 9:30. So as price makes these pushes higher, first one here, scale out. Second one here, scale out. And then I can trail a very small partial on that position because I'm going to get a lot more value on that trade when we're at the high of this daily range, selling into that strength, versus trailing it out to this swing low, for example, and then getting trailed out on a full position here because I'm getting greedy. That is not what I want to do. The narrative is telling me scale out into that strength, and that's what I did once here, twice, and then getting trailed out here on this down close candle. 9:30, not agreeing, capping the daily range, and then bringing price down. So that is my second trade with the same idea. Follow through on that daily candle to the upside. That's the valid framework from the daily that I'm very interested in trading off of this low. This is a signature that it has all my interest and is very valid in the way that I'm looking for my trades. When the market turns like that at 9:30, that is not a signal for me to go into this market. I'm not going to reverse my bias. I'm not going to reverse my trade. I'm not going to attempt anything back into the range because that is not my trade. I understand the market is moving, it's volatile, but this is not the framework because anytime the market does something against what I'm looking for, I already got my trade for the day. I have to go right back to step one, right back to the daily time frame. That's where I'm always starting. Not getting too caught up in these lower time frames, and it's returning to step one of there's nothing really specific at these highs that I deem any one of these very important. So when we're trading off of it, I don't know if it's going to hold. I don't know if it's going to follow through. I just know that was a sign to close my long position. And there is where I end my day and I remain flat on that note. The things I want you to take in this trade recap here for finding high quality setups and staying rooted in your system is, one, in my opinion, focusing on the daily time frame. What I'm looking at here when I'm going to the daily is for a good reason. When I find opportunity there and you're aligned with a daily candle, the entries become extremely simple. Go back to how I was explaining my entries. It's not an entry model. It's all about understanding that I'm aligned with a higher time frame, daily candle. And when I'm correct in that direction, I'm just trying to exist and position in that market without being removed, using opposing candles. That's my focus. And also I want you to understand the fact that when the market, once my trade was closed, began to turn at 9:30, that didn't mean I just jumped on a new opportunity. I'm returning right back to step one, that daily time frame, because that's where my system begins. And because there was nothing there, my day was over. I closed my trade, I closed my charts, and that is the end of it. I don't want to keep existing in a market that is not my setup, even if it's moving. That is not of my interest. That's not where the money is for me. So these are all the things that I really want you to take from this. And I hope you found it valuable and insightful. And I will see you in the next one.